Hello everybody, this is Coach D with TackleTrading.com, here to give you a very simple tutorial on how to buy a stock and to place a stop loss on it to limit your risk. I'm going to start out here with the stock from our scouting report this week with the options report. We have Kohl's, ticker symbol KSS, which is perfect for what we're doing here because KSS, keep it simple, smarty. We're going to keep it really simple. And we're just going to do a simple order to buy, and I'm going to kind of explain the setup and then how we're going to go about buying it and placing a stop loss. Now, I'm using the Thinkorswim trading platform by TD Ameritrade. There's other platforms out there, and you just want to make sure you use similar order types. And then again, the methodology here is really simple. The stock price broke out and rose to a new high and then came down and went on sale. We believe that the old price ceiling here near 68 is acting as the new price floor, and it's reasonable for us to expect that from here the prices are going to rise. Now, we're here and it's July, and I think with the back to school, it might be reasonable for us to forecast that they do okay plus fourth quarters around the corner. And again, a retailer like Kohl's would benefit from those things. They do have earnings coming up out here at the end, well, closer to the end of next month on the 21st or 22nd of August, around there. And the general idea is relatively simple. The pattern we see here is, again, an old support resistance barrier, which is usually a place where we see prices rise, where we see support bounce. We have a breakout and a pullback, which is a bull flag. And the time of year and everything else adds up. So we like it. We're going to place a simple order to buy, and we're going to limit our risk by placing a stop loss. Now, where you place the stop losses, we could talk about those techniques and methods all day long. But in reality, I just want to keep it simple and say, you know what? If it takes out that little double bottom right there, then we were probably wrong. If prices dip down below 68, that means we were probably wrong about our thought process that the stock was going to go up. So rather than find out how far it can go down, we're just going to stop out and limit the risk. So we're going to put in a simple order to buy at 72.33 is the current price. Now, the market's closed at this moment. This is an after-hours trade, which we're hoping to get filled tomorrow. And I'm saying we'll buy somewhere in that area, and then we'll put a stop loss down here, probably just right below 68. And that means we're going to have about $4.33 worth of risk. And if we did 100 shares, for example, 100 shares, that means we would have about 433 some odd dollars risk plus commissions. And if we didn't want to take that much risk, well, if we use a tighter stop loss method, we probably will be more likely to get stopped out. So if we stick with this kind of looser position size type or position trade type stop loss, then I'm thinking we might cut that in half and do 50 shares. And that means that would cut that in half, and we'd be down somewhere around $216.50 some odd cents worth of risk in that ballpark. And I might use some slightly different numbers when we put in the order to enter and exit, but that's the basic game plan. So I'm going to go here, and you could use inside of Thinkorswim, they've got little trade tabs over here that you can use as an active trader. I'm going to do a real simple method on the trade tab up here. So I'm going to come up here and click on the trade tab. And once I click on that trade tab, now I'm inside their trade tab where this is where you see all the stocks and the options. And when you want to buy a stock, you click on the asking price. And so I'm going to click on that asking price, and that's going to open up a ticket. But I want to do a ticket with a stop loss, so I'm actually going to go ahead and delete that. I'm going to right click on this. I'm going to go buy custom with a stop. Now, there's a couple different ways to go about doing this, but this is a simple way. And so I'm going to go ahead, and first thing I'm going to do is reduce my position size to 50 shares. And I've got this linked so that both those change at the same time. And then I've got this linked over here for the time in force. So I'm going to make both those orders good till canceled. And then I'm just going to come in and say, okay, we got a limit of saying, 72.49. Don't spend more than 72.49. I'm fine with that, 72.50. And then I'm going to come down and change the stop order down here to just below 68. I'm going to set that at 67.97, just a couple pennies below 68. So our risk, this not counting the commissions, is $2. Excuse me, I said that backwards. $4. I already kind of cut it in half in my head. $4.53 risk times 50 shares. Okay, so our risk is $226.50. $226.50 risk, which I'm pretty comfortable with. Now, of course, your pain threshold and risk threshold would vary, so you do the number of shares you want. And I'm going to go ahead and send that order in. That's an order again to buy. Don't spend more than $72.50. If it goes below $67.97, it's going to dump it. We'll go ahead and hit confirm and send. This little ticket just kind of repeats what we just talked about. The first order is to buy. Buy 50 shares. Don't spend more than $72.50. Second order says sell 50 shares. Stop if it dips below $67.97. That's $4.53 lower. And we know our risk. Our upside reward is technically unlimited. We could make unlimited amounts of money, but in reality, I'm really hoping to make about twice what I risked. So I'm going to go ahead and send that in, and then we'll come back and look at the chart, and you'll see the order sitting there. And so basically it's saying, hey, buy, but don't spend more than $72.50. And then if it dips below that $67.97, that stop loss would kick in. And otherwise, I think that stock could have the upside potential to go to 80, maybe as high as like 84, 85. So we're risking 1 in hopes of making, 2 or more, maybe 1.5 or more. So we got a favorable reward to risk ratio. And this has been Coach D showing you how to place a simple stop loss order when buying a stock using this Thinkorswim platform. And if you'd like to learn more about this stuff, by all means, come check us out over at tackletrading.com, www.tackletrading.com. We'd love to have you come on over. We got a 15-day free trial for you, and we would also love to see you inside our clubhouse so we can chat. See you there.